Welcome back to Retiring Today. We're talking about 3 healthcare traps that could derail your retirement and helping you avoid those healthcare traps. We've covered failing to plan for extra costs, underestimating Medicare premiums, and now it's time for trap number 3, ignoring long-term care. I'm Molly Nelson here with AnnaMarie Morrow and Loren Merkle. And really, you can't ignore long-term care. And one reason, AnnaMarie, is that Medicare generally does not cover long-term care costs.
It does not cover long-term care costs. When I am sitting down one-on-one with the individuals and families we work with, and we're reviewing the summary of benefits on whichever supplement they go with, part of that summary is explaining inpatient hospital or skilled nursing, you are covered up until day 90 or 100. You do have a lifetime reserve days of 150, so some extra days in there, but that's when it costs. And so a lot of times I'll get a question, well, then what? Then it's long-term care. And when you think about it, 100 days, that's just barely over 3 months. That's not that long of a time period. So that is something that we need to avoid, that trap.
Yeah, it's not that long of a time period when you look at the average stay. So the facts tell us that women need long-term care for 3.7 years and men 2.2 years. Also, the facts tell us that 70% of those 65 today will need some form of long-term care. 20% of people will need long-term care for more than 5 years. So that just really illustrates why you can't ignore long-term care.
Even though it's tempting, because nobody really wants to think about a time where they need home health care or they need to be in a facility, and really nobody wants to think about the cost of what home health care or facility care is going to cost them over the long run. So it's easy to ignore or want to ignore, but you can't, because the implications not only can it have on your retirement, but if you're married, your surviving spouse's retirement when you pass away. And then, of course, if you have any legacy ambitions at all of passing some of your assets onto your kids or grandkids, long-term care can really eat into all of that.
Let's dive into the cost. The average cost in the United States of an assisted living facility is about $64,000 a year. Home health aid, $75,000 per year. So really, these are costs that not only you should plan for, they're really expensive. And I know, AnnaMarie, you talk to people a lot about when their spouse passes. What people say to you is, I just really want to make sure that my spouse is taken care of. So how does that conversation go, and how do you help people plan?
It's an important conversation to have, and it is difficult because most of us have seen what someone has gone through caring for someone, and how do we avoid that on our own, because we don't want to be a burden to our family members, our loved ones, our children. How do I leave that meaningful legacy? So you basically have, there's 3 options available out there. Your typical long-term care insurance, which that market is pretty saturated, and we're not finding that kind of long-term care option available.
And as soon as you say long-term care insurance, people are like, no, thank you. My parents had that. Mm-hmm. The new policies aren't the same, and they're way more expensive. I talked to my friend, and they're paying X amount per month. That's not for me. So it's a turnoff right away when you say long-term care insurance.
Yeah, it's definitely not what it used to be. So now we have these different options moving into that space that can serve a few different purposes, right? It can help us leave a meaningful legacy, like a life insurance hybrid, or there are investment hybrids available where we can accelerate a death benefit should we need help offsetting the risk for long-term care should that need arise.
Yeah, and the old long-term care policies all required underwriting. There's a lot of options today that don't require any underwriting. And then there's some other hybrid options that, as long as you're already not in a long-term care facility, you can get some coverage to offset some of that risk. So not only are the coverages available today different from a cost standpoint and a coverage standpoint, but even from an underwriting standpoint, people with serious health conditions today still have viable ways to offset some of that risk.
And do these products that are changing, or these options that are changing, does it make it easier to have this conversation? Because I still have to think that there are a lot of people that they're hoping they don't need it, or they're banking on being that 30% that don't need long-term care. But when there's different options available, does it make it easier?
I think it does. I've seen that it does. But also when we discuss that 70% of people over the age of 65 need it, because what the trap really is getting in that mindset of, oh, that's not going to happen to me, right? But when we review with them, 70% of people over the age of 65 will need it for an average of this number of years. Then it kind of gets those gears moving to where we can have that conversation and look at their overall plan. Can we self-insure? Can we afford to self-insure? That is a popular route people go. Or what do we feel comfortable with offsetting that risk? And here are your options that don't require the nightmare of health underwriting that it used to.
And that's really what we outline in the Retire Secure Roadmap is first we look at what is their long-term care risk. And then we talk to them and say, if you have a long-term care event at, let's say, age 78, here's the estimation of how much it's going to cost. Here's what it's going to do to the assets that you have and the income plan that you have. What do you guys think? Is this too much risk? Do you want to offset some of that risk? If so, now we dive into the other options. And that's where the ease of the conversation is way different than 10 years ago, because 10 years ago, we were having that conversation. They were saying, yeah, that's too much risk. Let's offset some of it. Well, then we'd show them what long-term care insurance costs. And they're like, I can't afford that. I don't want to afford that. Today, we can show them way different options that are much more affordable, and they can still offset some of that risk.